This is how I would enter. We've got all these touches. Here's another touch at the median line. Price comes off this touch, and you can see it closed on its high, which is a sign of strength, after touching this sliding parallel. Now it's taking out highs. What's it do? It goes right to the median line and, once again, fails utterly. But remember, there's plenty of guys out there that got long up here because it was a new high, which is why they got long here and why they got long here. And you can see each time they got long, the market ran their stops, which is why we went down here. That's why it's called a rolling chop. They're just getting chopped up. You just want to say no. Don't trade it backwards like that. That's just a bad idea. Okay, so what I want to do, I like this test. I especially like it. It's probably hard for you to see, but this bar comes down and tests this same sliding parallel that held down here, and it closes on its high, which is a sign of strength. It closes with what I call good separation, which means it closes near the high of the bar. That tells me that there are buyers down there in control of this market. If it comes back down and tests a sliding parallel, I want to get long. But I got to check the stop. Can I afford the stop? The way I look at stops is this way. I have a mental checkbook in front of me. When I want to take the trade, I go, okay, how big a stop is this? And how much is it going to cost me per contract? And I start to write out the check in my mind. And if it doesn't meet my requirements, if it's too big a check, I literally go, well, that's too much. Never mind. I'm throwing this trade away. I'll just wait. I call it buying another bar or just look for another setup if you have to go to a different market. But if the check is too big, you should be thinking about that all the time. You want to risk enough that you can make money, but you never, ever, ever want to risk so much that you, A, are crippled emotionally, and B, obviously go tap. You never want to lose your bankroll, because once you lose your capital, you're out of the game. You know the Bond movie where the guy goes, I'm all in? Anybody see that? See, you can never do that. Even James Bond was stupid when he did it. And you know the first time he did it, he got tapped. And of course, the Americans came to his aid. But that's a different story. There's never, ever a situation where you can say, I'm all in, or I'm even 10% in. You should never be risking 10% of your account, ever, on anything, period. Because even if you have a royal flush, the other guy might have a royal flush with a better suit. There's just no point. Never take a bet that can make you bankrupt, ever. Or actually, you never want to take a bet or place a position that's going to actually put you in danger, even emotionally in danger. And let me tell you, if you lose 10% of your account on a trade, you'll be emotionally crippled. So please, don't do that. Always trade with stops. Put your stops in when you put your entry positions in. Never, ever, ever, ever take a trade without taking a stop. If that's all you walk out of here with, that will save you a fortune. Mental stops are useless. If you think you're good enough that you can use mental stops the rest of your life, give me your money, and at least somebody will like you when you're bankrupt. Because you will go bankrupt. And I teach at the Merc, okay, at the Chicago Mercantile Exchange, hundreds of traders, and I watch guys that don't use stops go bankrupt. Guys that have $10 or $15 million in their account. So believe me, these guys have been trading 25 years. If you don't use stops, real hard stops, there will come a time when you'll freeze and you'll be bankrupt. So please, always use stops. Everybody. Period. There's nobody here or professional traders good enough to not use stops. Save yourself the time and the energy. So I take a look and I say, okay, I want to get in at 102.09. And how did I figure that out? I took a look at where price would come down the next bar or two and test this sliding parallel, and that's 102.09. Where's my stop? I don't use cash-based stops. That means I don't say, I'll risk $150. What I do is, I will not take a trade unless I'm hiding underneath a swing low or a swing high, period. And the reason why is, there'll be limit buyers down here, right here. There'll be limit buyers here. Now, I obviously can't afford to put my stop here, but I can afford to put my stop here, so I'm going to risk 9 plus 6 is 15 ticks on this trade. Everybody with me? And I'm going to use this, I'm going to hide underneath this a little bit, which is a volatility cushion, underneath this swing low. And they should be limit buyers here. If I'm wrong, it'll run through here like, I don't know a phrase I can say over the air, but you know what I mean. It'll just plunge right through. People ask me what my losing trades look like. Generally, it's the next bar, and instantly I'm out. I'm stopped out. That's okay. That's what stops are for. That means I'm dead wrong. You just reset, look for another trade. But if the stop's small enough, you don't even blink. It doesn't bother you. That's why you should use quality stops, smaller size positions. All right, so now we know how to set up the trade. Now I put up here, how do I use multiple targets that make sense? Well, the truth is I never use multiple targets, but some of the people I mentor do, and one of my partners does as well, and a lot of guys at the Merck that I've had in seminars do. So I'm going to show you one example that hopefully you'll immediately say, this doesn't make sense. And I'll show you another example that has some thought behind it, has some merit. I still wouldn't use multiple targets, but you might, and there's a reason to. For example, if you have a very small account and you want to take some money off the table, I guess that's okay. The truth is you'll make more money if you trade a smaller amount and just box in your profits, which I'll show you how to do, and let it run to the logical profits targets. But that being said, if you feel like you have to pull some money off the table, I will show you a methodology that isn't the stupidest thing I've seen and makes some risk-reward sense. And that's what we're going to talk about here.